Hello, Madam Sue and everyone. We are excited to take you on a journey into the world of partnerships businesses. In our team of 4, we dive into the depth of the real partnership businesses to uncover its unique story. Today, we are here to share our findings with all of you. Before we dive into the details of our exciting project, let's get to know the fantastic team members who have been working diligently to bring this insightful knowledge. Here's my team members.
Assalamualaikum and hello madam. Today I will present my group members. Firstly, we have Azhari Bin Subri. Second, we have Voo Chung Hong. Third, we have Muhammad Adlan. And myself, Muhammad Fitri bin Radzali.
So that is my team members. So I want to take this opportunity to say thanks to all my team members who are diligently to make this assignment completely and submit by on time. So buckle up for a comprehensive exploration into the world of partnership businesses. Join me and my team as we unwrap the layer of this business, revealing its background, characteristic, financial structure, recording processes, and the nuances that shape its financial narrative. So if you guys ready, let's dive in. I'm excited to tell you all about partnership businesses. The name's given Kotask Bakery. It's not just a regular bakery, it's a special place created by me, Azhari, Fitri and Adlan. We all are working together. Kotask Bakery is in the lively KL East Mall. Our latest spot is at 823 Jalan Lingkaran Tengah 2, Kuala Lumpur Timur. We put in a total of 200,000 ringgit Malaysia to get this bakery up and running. It's not just about the money, we show how we committed with making something awesome. Now, let's talk about our day-to-day businesses activities. Kotask Bakery is not just your average bakery. We've got all kinds of tasty pastries, from the delicious croissant to the irresistible cakes. Our mission is to craft moments that remains in your memories. But it's not just about the food. Kotask Bakery is just like a cozy retreat. It's a place to chill out, enjoy the smell of freshly baked goodies, and take a break from your busy mall. We want you to feel at home, surrounded by friends and your tasty treats. Of course, Kotask Bakery is more than just a pastry shop. It's our way to creating a cool experience for you. We want you to leave with a smile, not just because you bought something, but because you have the moment of happiness with us. In KL East Mall, Kotask Bakery is like a team effort. We invite you to join us on this tasty adventure at the Kotask Bakery. So thank you for hanging out with me and learning our partnership businesses.
Today, I will present about business characteristics. Firstly, we go ownership. Partnership as HIP distinct business characteristic of ownership, including shared responsibility among partners, a joint decision-making structure, and the distribution of profit and loss based on the partnership agreement. Unlike sole proprietorship, partnership involve two or more individuals who contribute resources. The partners typically have unlimited liability, meaning their personal assets may be used to cover business debts. Additionally, partnership often benefit from the diverse skill and expertise of the partners, fostering collaboration and enhance the overall business performance. Incorporation. The basic agreement in the partnership are outlined in the Partnership Act 1966 or have on agreements. A partnership controlled and shared by the partners. For profit and loss, share among the partners. For liability of the business, unlimited liability, use asset to settle the debts. For life, limited life.
Back to me, Alvin. After Fitri Insight, I will take you through the classification of the business's items. We explore the asset, liabilities, capital, revenues, and the expenses that shape the financial landscape of our partnership businesses. First, asset. What's the definition of the asset? Assets are the things of the value that our businesses own that can be tangible like equipment or cash, or intangible like a trademarks or goodwill. Example for a bakery businesses, baking equipment like ovens, mixers, cash register, inventory of ingredient and the physical bakery space are all the assets for the bakery. Next, liabilities. Definition for the liabilities are the obligation or debts that our businesses owes to external parties. This can be include loans, bills, or money owed to the supplier. Example for the Kotask Bakery businesses, loans taken for equipment purchases, bill for the utilities, electricity, and water, for example. And outstanding payments to the ingredient supplier are also counted as liabilities. We move on to the revenue. Definition for the revenue are the income generated from the sale of goods or services. In simple terms, is the money coming into the businesses. Example for the bakery businesses, the money earned from the selling cakes, pastry, and other baked goods constitute revenue for a bakery. And number 4 is the capital. Definition for the capital, also known as owner equity, is the owner investment in the businesses. It includes the initial investment and any additional contribution made by the owner. Example for the bakery businesses, if the owner, let's say myself and my team, invested 200,000 ringgit Malaysia of this own money to start the bakery, that 200,000 ringgit Malaysia is considered the capital of the businesses. Now we move on to the expenses. Definition for the expenses are the costs I incurred to operate the businesses that generate revenue. This can be include ingredient costs, rent, utilities, employee wages. Example for a bakery businesses, the money spent on the floor, sugar, rent for the bakery space, electricity bill, wages for the employees are all considered expenses for a bakery. In summary, for a bakery businesses like a Kotask Bakery, asset will be the baking equipment and the ingredients. Liabilities will be the loans and the bill. Revenue comes from selling baked goods, capital in the initial investment made by the owner. And the expenses include the costs associated with the running of bakery. Thank you.
Assalamualaikum and hi, very good day. So my name is Azhari Bin Subri. So today I will present for the topic given to me, which is a recording process of business. So based on my findings and my research, I was found that there are the 10 points that will be present in the recording process of business. So the first point is the identifying transaction. So for this identifying transaction, we can know as the recognizing and identifying all relevant financial transactions that occurs within the business. So for the next point, the number 2, source of document. So for this point, as we can know, this is the collecting and organizing source document that provide evidence of the transaction. Okay, we go to the next point. This is a number 3. This is a transaction analysis. So for the transaction analysis, we can know as the analyzing each transaction to determine its nature, the account affected, and the monetary value involved. So for the next point is point number 4 is a recording in journals. So for every entering the identified transaction into the chronological records, we can know as a journal. So for the point number 5, posting to ledgers. So for this point, you can know as the posting to ledgers by transferring the information from journals to the general ledgers. Okay, the point number 6 is a trial balance. So the trial balance is preparing a trial balance, which is a summary of all accounts in the general ledgers and their respective balance. Next, the point number 7 is the adjusting entries. For this adjusting entries, making adjusting entries to correct errors, allocate revenues and expenses to the appropriate accounting period. And next, for the point number 8, financial statement. So every general financial statement, such as an income statement, balance statement, and a cash flow statement, and so on, it based on the information in the general ledger. Okay, next, for the point number 9 is the closing entries. Closing entries are made at the end of the accounting period to reset the temporary account to zero in preparation of the next accounting period. Then we go for the last point, is a point number 10, is a post-closing trial balance, which is, it means that the verifying the accuracy of the closing entries by preparing a post-closing trial balance. Okay, that's all for the 10 point for the recording process of business. As my conclusion, I can say that the recording process is an effective recording process is critical for the financial management, reporting, decision making within a business, and it also facilitates compliance with the accounting standard and the accounting regulation.
Assalamualaikum and good day everyone. I'm Adlan. So today I'm going to talk about the strengths and weaknesses in the recording process in a business. So first one, I'm going to talk about the strengths. And firstly is about accuracy and reliability. So in a business, the recording process ensures that financial transactions are accurately and reliably documented. This is crucial for generating trustworthy financial statements and making informed business decisions. So the second one is decision-making support. So accurate financial records enable management to make informed decisions. So the recorded information provides insights into the financial health of the business, so helping with the strategic planning and resources allocation. So number 3 is audit trail. So the recording process creates a clear audit trail by documenting each transaction with supporting source documents. So this transparency is valuable for internal and external auditors in verifying the accuracy and legality of financial records. So number 4 is efficiency with software. So many businesses use accounting software to streamline the recording process. This automation reduces the errors and speed up their process, and also allow for real-time tracking of financial data or financial information. The last one is financial statements. So the recording process is fundamental to the preparation of financial statements, offering a comprehensive overview of a business performance and position. These statements are crucial for communicating the financial health of the organization to the external parties. So next, I'm going to talk about weaknesses and challenges of the recording process. So the first one is human error. So despite the use of accounting software, human error can still occur during the data entry, analysis, and also the interpretation. So this can lead to inaccuracy in the financial records and consequently in the financial statement. So the next one is complexity. The recording process involves multiple steps. So from identifying the transaction to the preparing the financial statement. So the complexity of the process increase the risk of errors, especially if there's a lack of expertise and also understanding among the personnel involved during the process of recording. Number 3 is time consuming. So the recording process can be time consuming. So especially for the businesses with the high volume transaction, manual data entry and analysis may lead to delays in producing financial information, which can impact the decision making by the management. Okay, and the last one for the weaknesses is software vulnerabilities. While accounting software can enhance the efficiency during the recording process, it is not immune to technical issues like errors during data entry and so on. So software glitches or security breaches could also compromise the integrity of the financial reports. So in conclusion, while the recording process is essential for the financial management and reporting of a business, it is not without its challenges. The strengths lie in its ability to provide accurate and reliable financial information. However, weaknesses such as human error, complexity, and software vulnerabilities require careful attention to maintain the effectiveness of the recording process.